Good morning. Thank you for joining us for the Daily Bread. Today we are looking at the markets, relatively flat open today. It looks like the S&P futures are up about barely in the green, just up a couple basis points. But the name that we are going to take a deep dive into this morning is going to be Target. But before I get into Target, I just want to remind everyone, check us out on Twitter at harvested_DAFE. That stands for derivatives are for everyone. Go ahead and pull that up. We're putting out some really interesting content there with regards to volume and open interest and tracking how the major indices volume is changing and where the texture of that volume comes, whether it's in the weeklies, monthlies, or quarterly options. Take a look at our Twitter. Lots of interesting stuff coming out there. So let's jump into Target. Target released their earnings this morning, and they actually did quite well. Stock is up a little over 1% this morning, almost 2% now, a little over $3, trading around 166.29. So I'm gonna go ahead and share my screen and let you guys take a look at what I'm thinking about for Target. So first things first is looking at some of these options. They're wide. These markets are quite wide. Looking at that 170 strike in December, I'm seeing that market 420 at 490, so almost 70 cents wide. Now, this is a $160 stock, but some of these cheap ones are still even 15 cents wide. So you're gonna have to really think about how you're getting execution in here to make sure you capture the most. Because with that wide of a market, a couple extra pennies really is going to matter for the ultimate outcome of your strategy. So just a thing to be aware of when you're trading some of these high dollar names, and especially if you're trading right after earnings. The big release comes out and everyone needs to adjust their volatility expectations. So generally market participants are going to have slightly wider markets because they're not going to be as aggressive while the market's recalibrating to this sort of news event release. So what should we think about in Target here today? Well, actually, one thing that I'll point out is I'm looking at the implied vol here. So the implied vol on these December 18 options is around 28. So that's come in quite a bit. But overall, Target tends to move. And I should actually say, Target tends to not move very much. And I'm going to pull up the historical volatility chart here and give you an idea of kind of where Target's been trending over time. So this actually, the yellow line here, that's going to be the stock price of Target. So we've had a nice rally, since the depths of March. But then I'm also looking at the implied vol here and the historical vol here. So the historical vol is a 30-day close-to-close measure. And then the implied vol that I'm also looking at is the 30-day implied vol also. So where has the 30-day option typically been trending? And if you look over the past 2 to 3 months, that's typically been quite a bit higher than the historical vol. We really had some, low historical volatility here as, the market was grinding up, and implied vol continued to stay bid. So this might be an opportunity that we want to think about selling some implied vol, but with a bullish direction. So the way I'm going to think about that is look at some of these, near-term downside puts in December. So with stock trading around 167 right now, if I sell the 165 put, and then I want to have a defined risk here, so I want to buy the 160 to give myself that defined risk should Target really drop here. Paying 30 cents for the 160, collecting around 130 for that 165. That would be sort of our best case scenario. But again, these markets are pretty wide, so we're going to have to be careful about execution. Midpoint on this trade, usually that's a pretty good indicator for about what fair value is around 90 cents. So we might have to give up a little bit of edge to get that. But price of this is coming in as stock continues to rally. As you can see, we're up almost 3% right now. So really still continues to move. And I suspect that's a lot of the reason why these option markets are wide is that, there's still a lot of news to be digested here. So looking at this put spread, moving pretty quickly. Now it's back up to 90 cents already. Let's do a what if scenario and see where I sort of make money on this name. So selling that put spread, I'm going to collect around 88 cents here. And that's going to be my max gain. So I collect the 88 cents a contract, $88 on the 100 shares that contract represents. But I do have a downside loss of around $400 if this really does fall. So, you can actually see with the market moving so much, this put spread is becoming increasingly out of the money. And the further out of the money put spread we sell, the lower value that we're actually going to get for that, for the approximate risk that we're taking on. That's going to allow you to capture some of that volatility premium that might be in there, and also engage with a bullish bend. However, if you're seeing this vol crush, and looking at that as an opportunity to buy options because you really do expect this to move, buying on the debit side does give us a little bit of a better perspective on what our actual outlay is here. I might flip into a call spread. So looking at this just near upside call spread, that's only trading around 70 cents. Looks like we can buy that for 70 cents. So just to be clear, I'm looking right up here at that trade price. That means I can lift that offer, pay 80 cents right now. If I'm going to buy that call spread, what does my payout look like? Well, my payout here, I get a max gain of $182 and a max loss of that 70 that I put into to own those contracts. So on a 250 call spread, the max gain is going to be $250 minus the amount we paid of 70 with a max gain of 182. And we're going to see that max gain if stock does close over 172. So by the end of the December to see Target close over 172 would not be that much of a stretch. We're only about $5 away here. So two different opportunities to look at with Target, whether you want to enter on the debit side and go bullish on the name, or whether you want to capture some of that implied volatility premium that we looked at and sell the downside that still gives you the bullish bent with a little bit of additional volatility premium collection. So Target earnings this morning, we're looking at the vol crush. We're looking at how wide those markets are and how important it is to execute diligently in there and with precision to capture those extra pennies, because they're really going to end up paying off in the end. So every nickel you get, it means $5 in your pocket per contract. So be careful with the execution out there. At Harvested Financial, that is exactly what we excel in, and pricing those mid-market spreads and getting our clients the best trade prices possible. So check out Target. If you believe that they're going to continue to rally and gain market share, if people are buying more sleepwear, Target's the play to get. Thanks again for joining us. We're here every morning at 8:35, just after the market opens, 8:35 Central, 9:35 Eastern. Join us for the Daily Bread. Thanks, everyone.